Good evening, everyone. This is Abhimanyu from IIFL Securities. Today, we are doing this pulse session to discuss about what has happened in the market today and what is the future outlook, and are there any opportunities to buy right now in the market. Now, let me just spend some time and talking to you about what actually is happening in the market. Why are we seeing this kind of movement in the market? What are the kind of challenges that the market face, as well as a historical perspective on why it is happening and why you should be worried or not be worried about the same. Now, the way I was looking at the market today, it reminded me of 2008. So just to recall for a lot of the investors who are there at particular time in the market, from 2005 to 2007, till end of December, or the first half of January, the market was rocketing in a big way. I had a lot of my clients making 50% return in a month. That was a kind of movement. And then suddenly there was a IPO of Reliance Power, and after that everything tanked. So it was quite a difficult period over next 5 6 months. And then you had the Lehman crisis, and also after that the Satyam crisis. So you had that kind of despondency in the market that nothing will work. The difference between 2008 and now is, at that particular point of time, the earnings growth was very strong, whereas currently the earnings growth are not that strong. Second difference was that the market went down more because of macro issues and overvaluations. Whereas today we have a struggling macro. About 80% of the stocks are trading at less than one standard deviation median valuation. So what I mean is that some of the stocks are still expensive from historical perspective, but they are not overly expensive. Also, if you look at 2011, that was the dream period for the market when we saw a big, you know, jump in terms of, visibility of stocks which one could buy, and a lot of those stocks went up 10x, 15x, 20x over next couple of years. So, looking at how the market had gone that time, one should not feel that this is the end what has happened today. I think so we are somewhere in a journey of in this particular bearish kind of a sentiment in the market. Why this particular sentiment is prevalent, just to give you some perspective, in 2008 large part of the investors were FIs, whereas at this particular point of time most of the investors are the domestic guys who have put in money. So domestic guys put in this year close to around $43 billion, whereas the FIs have put in around $10 billion. So since the smaller investors take time to move out of market as well as to come in the market, we have seen that the market fall is not as rampant as what it was in 2008. However, in this particular month itself, the FIs have sold stock which is now worth nearly $1 billion. Now, why are they selling? So the reason is, first of all, there was an expectation that when the new government will come, a lot of reform will happen, simplification of taxation will happen, the government would be pro business. However, as we had discussed in our previous pulse, after the elections, the mindset of the government seems to be that we need to go through what earlier we used to talk about the oceans, about if you talk about the Mahabharata, Ramayana, that churn in the ocean, right? Samundar Manthan. So that is what was talked about. So I think so the market is going through its own Samundar Manthan or ocean churning. Because of that churning, a lot of companies which had got money on debt with a lot of banks, those companies allegedly have got that money which they should have not got. And as a result of that, we're seeing pressure on the credit rating companies. Two of the major credit rating companies CEOs have gone on leave. Other credit rating agencies are under pressure. One of the leading auditors in India have been told by RBI not to audit any bank for next 5 years. A lot of independent directors, they are quitting a lot of companies. So, for example, in case of credit rating companies, what one is seeing is that, like they say in Hindi, दूध का जला छाछ भी फूक फूक के पीता है. What's happening is that a lot of these companies who supposed today were rated double A, they are getting downward revised, even if the credit rating feels that there's slight reduction in terms of the asset quality. Or we have case like, for example, in case of Magma Corp, which was just got downgraded yesterday, I believe. The CEO of the company, of one of the main businesses, resigned, but he'll be with the company until March 2019. Now that was considered as one of the reasons why a lot of downgrades happened in that particular company. So what we are seeing right now is that there's which is right now prevalent in the market, where everyone seems to be looking at, which will be the next company where there could be an issue. We've seen a case of Quest Corp, where one of the companies to which they were doing business with, that has gone down. So there is a question mark about whether they'll be able to recover money. So in all, what's happening in this kind of scenario is that suppose I'm an RBL bank today, I have lent money to certain company which was credit rated at certain level. Now, because of this downgrade which has happened, I have to do more provisioning in my books. My credit cost increases. Secondly, what has happened with some of these banks? Let's talk of RBL itself because today it's in the news and the stock is down some 13-14% post result. One of the main projects that they had given funding to in Andhra Pradesh, the new government is saying that we may not do that particular project if the costing is not reduced. So what happens to the money which the banks have given to those projects? So these are the kind of questions that have been regularly asked in the market. People are asking questions of companies who are doing ICDs, intercorporate deposit, which means one company is giving loan to one of its group companies. Whether that money is coming back or not, questions are being raised on that. There are questions being raised about pledging of shares. So the entire cycle, and coupled with the recent slowdown on the consumer side, as well as the challenges which are being faced on the fiscal side by the government because they have not been able to get enough broadbanding of taxes, that everything has led to this kind of a challenge in the market sentiment. And for that reason, we are seeing that the market seems to be going nowhere on the large cap side. And on the small cap and the mid cap side, the stocks are going down left, right, and center. Now, the question that you're going to ask is, what should I do? या जैसे हिंदी में बोलते हैं, क्या करने का, right? So I think so. This is a question that one needs to answer from a psychological basis, looking at what is the mindset of a person. There are two category of people who are there. One category of people would be people who will try to grab a falling life. So we've seen instances, whether you talk about the Yes Bank, whether you talk about DHFL, we are seeing large amount of increase in the shareholding of retail investors, and the smart money guys, the institutional guys, have moved out of some of these stocks. So that is the challenge which all retail investors are facing, that when there is a bad news, they try to themselves figure that क्योंकि अब स्टॉक कम हो गया है सस्ता, तो अब इससे नीचे क्या जाएगा. So I can tell you very one simple thing. Even if a stock price is at 1 rupee, if it goes to zero, the loss is not 1 rupee ka loss, the loss is of 100%. So please bear that in mind before trying to bottom fish in stocks. The second thing is, then where do I put my money? Should I put my money in FD? Should I put my money in good quality stocks? Those are real challenging questions to answer. So let us look at from a perspective, and that will help us understand the overall valuation matrix as well. From, say, for example, FY20 levels, the earning yield of index is close to 5.1, 5.2%. What it means is that today, if we have invested 100 rupees, okay, the yield on that, the earnings which are being made on that is 5.1. So 100 रुपए पे आपको 5 रुपया मिल रहा है. Abhi, if you look at the government yield, the government bond yield which is there, risk free. So for economy, the benchmark rate is not the FD rate, but it's the 10-year bond yield rate. That is close to 6.4%, which means कि 100 रुपए पे 6 रुपए 40 पैसा तक आपको मिल सकता है, जिसमें कोई रिस्क नहीं होगा. सॉवरेन जो है वो गारंटी कर रहा है, इंडियन गवर्नमेंट खड़ी है कि वो पैसा हम पे करेंगे ही, राइट. तो सबसे पहले ध्यान रखिए कि उस 6.4% से ऊपर कोई भी पैसा जो आपको मिलता है वो 100% रिस्क फ्री नहीं है. ये बात हमें एज निवेशक जान के ही रहनी चाहिए. चाहे कहीं भी वो पैसा डला है, 6.4% के ऊपर 100% गारंटी नहीं है. वी कैन से प्रोबेबिलिटी के एफडी के अंदर 99% या 99.5% प्रोबेबिलिटी है कि वो पैसे को कुछ नहीं होगा. अगर हम गवर्नमेंट के एनसीडीज में गवर्नमेंट कंपनीज के डाले तो उसको कुछ नहीं होगा. मान लीजिए हम एचडीएफसी बैंक का कुछ लेते हैं जो बहुत अच्छी कंपनी है, तो उसमें से 95% चांसेस है. So we have to be pretty sure of those things, that we understand the risk as such. The other thing is, should I buy in the good quality companies which have come down, or the stock prices which have really come down? Now, first of all, we need to understand the genesis of this fall. Like, for example, in case of, say, HEG or Graphite, we are seeing that the business is down. So, despite you would be seeing that last 4 quarters, say, profit has been very good, the stocks have come down by 60, 70%. Now, why that has happened? Because the smart money knows that going forward, the profits of this company will come down. So even when the good profit last numbers were reported, they just moved out of the stock. So let's be very cautious in trying to catch a falling line. Which are the stocks then to buy? So I think so. This is a good time to think of investing not at something which is just related to a price, but related as a discipline, right? So, say for example, to look the entire market, people who have invested in HDFC group of companies. You talk about HDFC Life, you talk about HDFC Bank, you talk about HDFC Limited, you talk about HDFC AMC. All those kind of stocks are going up. Now, why is it that these stocks are going up? The reason why these stocks are going up is because the mutual funds have shifted from around 48% holding in large companies to now 60%. So everyone is fearful. So they want to be in quality. And for that reason, we are seeing that this some of these stocks are going well and rest of them are not doing well. So what do we do? I think so. It makes sense to start doing a systematic investment plan within stocks as well. I think so. A lot of time we talk only about mutual funds. Analysts like me or anyone who comes on TV, we talk only about mutual fund में SIP करना चाहिए. I think so. It's the right time for direct equity investors also to play that route. The reason is that we don't know that how much will the market go down. So what we have to ensure is that there's survival, right? So there are two things. One is error of commission and one is error of omission. So, a lot of the big investors talk about this thing. So, अगर हिंदी में बोलूं तो कोई चीज हमने इन्वेस्ट नहीं की, वो ओमिशन हो गया. जो चीज हमसे गलत हो गई, वो कमीशन हो गया. सो कई बारी जो है, लॉट ऑफ टाइम्स जब बुल मार्केट होता है तो ओमिशन होता है कि ओह गलती हो गई, हमने स्टॉक नहीं लिया. अभी की मार्केट में क्या लगता है, कमीशन है कि गलती कर दी, ये गलत स्टॉक ले लिया, राइट. So that's human psychology, which will keep on changing. So right now, our focus should be to find 5 large cap companies where we know कि 4-5 साल तक कंपनी जिंदा रहेगी कि नहीं. ठीक है, वील नॉट टॉक अबाउट नेक्स्ट क्वार्टर क्या होगा, इस पर्टिकुलर क्वार्टर के रिजल्ट्स कैसे आएंगे. ये कंपनीज इतनी बड़ी हैं कि प्रेशर आएगा, कुछ प्रॉब्लम आएगा, तो दे विल विथस्टैंड दैट. Those are the companies that we should buy. So which are those companies according to me? HDFC Bank. ठीक है, lot of people say that it's expensive, but he'll still grow. Maybe he'll not grow at 20, he will still grow at 16. He's not going to go down to 0% growth. Okay. So that is one clear bank where there's a significant amount of confidence that one must have that profits might slow down, stock might come down a bit, but the company will survive. ITC, stock, what is the main business of the company? They are into hotel, they are into paper, FMCG, but it's cigarettes. So I'm not quantifying people should have cigarettes, but end of the day, people who have cigarettes, they clearly need to have it again. So there's an inelasticity of demand. Would that company survive after 5 years? Well, the probability is pretty high. So why not do an SIP in that? Next one could be a Larsen and Toubro. Capital goods sector is doing okay. Credit growth is coming. Again, we are moving out of a capex cycle. Should I go and buy a small cap company that I don't know that whether they'll survive after 3 months, or should I buy a Larsen and Toubro, which I know used to earlier in 2018? I remember eight. I remember it used to trade at 28, 29 multiple. Today it's trading at 17 multiple, and growth is coming. So why not invest in that? Axis Bank. The bank is going through a transition of moving to retail from corporate. They've got a new CEO. They are doing a lot of changes. Is the risk reward favorable? Yes, it is favorable. Reliance Industries. Yes, the result might be bad this quarter. Okay, fine. But don't you think so? He has a lot of investment which is done in new things. Retail. Is there any international big brand which Reliance brand has not tied up with? Aren't most of the consumers shifting to Geo? Isn't it that their petrochemical business will continue to do well, except, even if electric vehicles come, at least 75-80% of the vehicle will continue to be petrol. There will be still demand of chemicals. Electric vehicles is not going to take away that particular business. Only the business of demand for uh, petrol and diesel will come down. So these are a lot of companies which I am saying would survive over next 4 5 years. So these are the kind of companies that you should continue to remain invested and be invested in a SIP format. I am not telling you that you put your entire allocation right now. So if you have 10 lakhs rupees, please put in today in every each of these companies 50,000 rupees. Next month or whatever period you have, add on that money. Similar way, make it a disciplined approach. Don't get into what's happening in the market every day and worry about what is the fall in the portfolio. Everyone has seen a dip in their portfolio values, right? Unless you're lucky to have just 7 8 stocks which have done really well. So be disciplined, ensure that the companies that you've invested in, that you see and are visible enough that they will survive, right? Because this current pain which has happened in terms of how the credit rating of companies has come down and how the entire market is moving, it will continue for a couple of months. You can't say in next 10 days it will go up. So the difference between the yield on equity and of bonds is now 1.5%. Typically what we have seen is that if the yield goes to 5%, or the equity yield goes up above, which can happen either the stock price corrects or the earning growth improve. If that happens, when they are similar or slightly, equity is always at a premium, so you can continue buying. When it's at a slight premium, I can vouch for it that history, whether you talk now last 10 year, 20 year, or even 40 year, the probability of making money over a long term period is very good when there is a convergence between equity and debt. So I feel, investors should right now get into finding the large companies that they know. Don't work on this tip which you have got from your friend in the train, or who's just doing some random research and giving. Stick to the large cap companies. Keep doing a SIP regularly. If you need some help on stock SIP, we can always at IIFL help you out with that. But besides that point, I think it makes sense to focus on that and continue your investing journey. Now, let me just in the next section take your questions, and then we will end the session. So people have asked about question about Wipro. Within the IT side, I think so. Our preference would be among the large cap Infosys one, number two TCS, and number three Wipro. There's still some uncertainty with regard to the buyback because of what the government has come up with regard to the taxation, which obviously is quite unwarranted being done by the government. So let's see. ACC Cement, I think some very good results. The kind of margins which were shown by the company. Going forward, there could be some decline in volume for the cement industry. So we are not very confident. But if you continue to own the stock, I think so you should hold the stock. Maruti, I think so. It's more of at 5,700 rupees. The point is a lot of people are bullish on the company. It's a good brand at 5,700 rupees. Yes, SIP route, you can buy the stock. Yes, bank, don't buy the stock. Don't try to bottom fish. That has been our position for last 5 6 months, and we'll continue with that position in the stock. Graphite India, again that falling knife. Don't get into it. Somebody asked about Reliance Industries. I said by SIP you can continue to do. Wipro have already answered. Solar Industries, excellent company. They have diversified now from Coal India substantially, but the multiple is at 40x. So I would not recommend you. I think so. There could be better opportunities to invest. Though as a company, I would say that it's a very good company who have a very good understanding of their business. Reliance Capital, I don't think so. We should touch that. One should stay away. RBL Bank, we already discussed something what has happened. I think so. The price correction has happened to some extent. Once there's more stability on the NPA number, because the management said that the credit cost being higher can go up to around 2.5% NPAs. So I think so that's a big concern with the bank. So right now, I think so we should, if you're looking for incremental buying the bank, I would say wait for the dust to settle before looking. Let's see what happens on some of these accounts that they have before looking at buying the stocks. It's better to be in the large cap five stocks that we talk about. ADFC Live, we already discussed earlier. Excellent company. Analysts will keep on telling you that it's an expensive stock, but insurance is the next sunshine sector after what has happened to banking. It's the best quality bank company. Most of the people trust HDFC Life because of the brand equity. Stick to it. You can obviously will double your money in next 5 years in HDFC Life. ACC Ambuja, I think, is a similar kind of a view we have. Electra Green Tech, uh, this investor would be interested in this because they are into electric vehicles. The only thing is the market cap is quite high. So that is one concern which is there in terms of their business model, and because of their association with a leading electric vehicle of China. I think so. It could be a company which could give you multi-bagger returns, but I am not sure of the risk reward. So you do your own research on that. There have been some questions which have come on Bank of Baroda, Indico. So I think so. In case of Indigo, what happens on the promoter side? I would hope that over the next couple of weeks that will get sorted, because the auditor has said that there is nothing major which has come out. Uh, sorry, ENY has said that there's nothing major which is there with regard to some promoter transactions. So I think so it's a decent stock to own. With regard to HDFC AMC, I think so that's also a brilliant opportunity. See, looking at other AMCs, they might be available at a lower price. But I think so what has happened is with the distributor commission reducing, the ability of the large companies to get a pull in terms of customer base is humongous. And for that reason, I think so it be a stock which could do very well going forward. IndusInd Bank, I think so from here you can expect around a 15% kind of a return because they will get some benefit of Bharat financials. The provisioning was lesser this time. If you look at what has happened, just to discuss a little bit about the banking sector, you see the RBL result, you see the result of DCB Bank. Why have these stocks tanked? The reason is that some of the old stresses of NPA cycle are now coming, or because of this credit rating reduction which is happening now, what we are seeing is a lot of these guys are now getting impacted in terms of higher credit cost. So it's a cycle which will continue to impact them negatively, and for that reason, I think so you should be stay away. So I think so a DCB bank I would be more preferable to buy somewhere close to around 180 rather than at 200. IndusInd also, as I said, for 15% kind of upside, you can look at this particular stock. And see, a lot of people ask question like, for example, ITC is falling. No, I'm not sure what he's talking about. Because typically the stock has come down by 5-6%, when a lot of these small cap stocks are down by around 35-40%. So I think so, we need to be cognizant of our goals. If you have a 5-year view, so I think so we should not be that worried. People have asked about Edelweiss. I would say that, right now I would avoid that because they seem to be focused on the corporate side with a lot of stress. They are not that much into retail side. I think so retail would be around 18% of their overall book, if I'm not wrong. So for us, better to be in the financial space if you want to be. Insurance is the right space. What are the stocks to buy? SBI Life, which one of the person who's coming online is asking about. SBI Life would be one which one should be looking at, and second could be HDFC because their pedigree is excellent and that will continue to do well. See, a lot of people continue to ask about DHFL, but I would say until and unless in any of these companies, I reiterate, any of these companies which are going down by 60-70%, which are into leverage business, which they borrow money, unless you find any private equity investor putting in money now, don't get into it. So buy Yes Bank, buy DHFL only when some other investors have invested, then only you go. Don't try to please yourself, try to bottom fish yourself. It's a market which is correcting. There'll be companies like REC, which someone has asked, they are doing well. Now, why is it that they are doing well? Now, because the bond yield has come money to some other companies, you know, it's a government company, so that's why they'll get lower cost of funds, and they will come out with their debentures and all. So that's the reason companies like REC are doing pretty well. With that, I think so we have answered most of the questions. So thanks a lot for joining us and with such a good response that one is seeing. Sorry we started we sent out a communication quite late for this particular webinar, but we thought that since the market has really come down, it's our duty to be with the investors and give our perspective on the market. Thanks a lot for joining with us today, and let's catch up on a pulse pretty soon. Bye bye.